as you are beginning that journey of retirement, of your slow retirement.
Yeah.
So you need to get a retirement number. So if you know, if maybe you anticipate that, let me say, your monthly expenses once you retire will be, let me say, 100,000. Get that 100,000, which is your monthly expenses, and multiply it by 12. You will get your retirement number for 1 year. So that is 1.2 million. 1.2 million. In finance, we use like a multiplier of 25, assuming that maybe you will stay for 25 years after your retirement, or like just taking in account things like now inflation, your different lifestyle. Multiply that 25 times the 1.2 million.
Before we dive into this conversation, we would like to take this opportunity to express our sincere gratitude to all our viewers and listeners for your support, because it makes this podcast what it is.
So in today's conversation, we'll be having a talk about finances and investments. And this is a continuation of what we had done before. We had told you that we'll be bringing you more in-depth conversations about investments and what areas you can be able to put your money in and also be able to make passive income. So I think this is the day for it.
Yeah, this is the day.
Yes.
So make sure you stick around.
Yes, and definitely go back, ensure that you watch the finance video that we did before.
Yes.
And any other videos as well that you have not watched, and then come back to this.
Yeah.
And I think we can begin with how our week has been. I know we are talking about investments, but it's important for us to actually check in and get to know how we have been. So how have you been? How has your week been?
My week has been hectic. And yeah, I'm trying to gather up the energy back. Yeah, but so far so good. As much as it's been hectic, it's also been very productive. So I'm grateful. How have you been?
I've been fine. A lot has been happening, and juggling in between everything. And life has been lifing, but here we are. We are grateful. We are grateful that we are here. Yeah, and I hope you are okay as well. Yeah. So I think we can dive right into it. We can begin with the basics that we had talked about in the previous episode. We had talked about money market, and I think we can begin with money markets. Let's get to tell our viewers what money market is and what it entails, what they should look out for when it comes to money market funds. Yes.
Okay, so I think before we just dive in, we can just let our viewers know we're going to discuss both passive and, let's say, active sources of income. So like for the money market funds, it's basically a passive source of income. And from my understanding and from my short experience, a money market fund is just like let's say a platform or an investment whereby you give your money to a fund manager. These fund managers are basically, let's say, companies that deal with, like, they would collect a pool of funds from different people, in this case investors. So even with your 100 bob, you're an investor in case you get a money market fund that accepts that. So they pull these funds from different people and then invest in, let's say, financial assets such as stocks, treasury bonds, and the likes. And then as a result, you get paid interest. But the difference is that your interest is compounded on a daily basis. At least that's what I know for the fund manager I work with, or I'm using currently, because your interest is earned daily on that money. Yeah, so that's my basic understanding.
Yeah, and it's basically what you have said.
Mm-hmm.
And what I would want to just add on to that is
Mhm.
that for money market funds, it's a short term.
Oh,
It's a short term investment.
Mhm.
It's a passive and a short term investment, and it's mostly advisable that you invest maybe for 1 year, 2 years, and for specific goals. So
Okay.
it's a goal based investment. It's not something that you are thinking that it will give you financial freedom now. All of a sudden, you're now rich because of money market. So, no, I think it's a short term investment, and people need to save in money market fund for maybe it can act as an emergency fund, and it can also act like a place where you just put your money in for maybe a specific goal that you have in 1 year or in 2 years, but it's not a financial freedom based
kind of
on
thing.
yes.
So I think so people can actually just opt for money market funds instead of fixed an account in the bank. Right?
100% yes, because
Yeah.
of the compound interest that you have talked about. Because you see, in the banks they use simple interest.
Yes.
And simple interest is actually a percentage of maybe
Just
if it
that.
is 6% of the principal
Yes.
amount. But in compound interest, it will be 6% of the amount that you have. Let's say if it is 6% of no, definitely it can't be 6% because it has to be higher than the inflation. And right now the inflation is like 7% or somewhat. So it has to definitely be higher than the inflation. So if it is, let me say 10%, if it is 10% of your principal amount, which is let me say 100,000, then you will be able to make maybe 1,000 shillings out of the whole amount. But in the next month, now it will be now 101,000. It will need to be 100,000. Yeah, that is the whole difference between compound interest and simple interest, and people need to utilize the compound interest. Please stop using the simple interest. Yeah.
So, what would you say, like, some of the like challenges, or rather, hindrances when it comes to investing in a money market fund, or just from your personal experience, would you say there are some issues, some things you face, maybe with your fund manager or while trying to invest in it, and probably what do you look for when investing in a money market?
Yeah, I think that is a very good question because I have worked with two money market fund managers, and there is a reason why I moved from my previous one to my second one now. So number one thing that I looked at initially when I was starting, I was just looking for a money market fund. Like I didn't know exactly what I was looking for, but I just wanted to be in the like the mass of money market funds. Yes. I just wanted to do something because people are doing something. But now over time you get to understand what your needs are and why you are saving, and you actually get to do your due diligence of the company that you're investing in. So my initial money market fund manager, the number one, what I liked about them is that you could be able to withdraw your funds within like 2 to 3 days, which is good. And that is what also I'm getting also in the new money market fund manager. My problem with the previous one is that their customer service was not good. And I think for such passive income and short-term investments, you need customer service, a place where the customer service is really good. And you can be able to talk to them anytime because it is short-term and you might need your money anytime, especially if maybe it is an emergency fund for you. So the customer service was not really good, and then they had an online platform. They were saying that you can be able to withdraw from the online platform, but sometimes the online platform was actually not working, and it was super draining and stressful because I was like, what if there is an emergency? Because I was using it as an emergency fund for me. So I was like, what if there is a day I need this money and I'm not able to get it because of the customer service and their platforms are not working for me. So I decided to opt out. So I think that is one thing that people need to look at. Customer service of that specific money market fund manager, and also definitely the costs involved.
Mhm.
Most money market funds have like 2% management fees,
Yeah.
annual.
Yeah, annual. Yes.
Yeah, and then there is also the withholding tax aspect
Mhm.
that is constant everywhere. So I think
Mhm.
maybe we can check at the management fees, which is 2%. Some might charge a little bit higher, so I think we need to get to see which one is good for us
Mhm.
and cheaper for us either
Yeah,
way.
definitely. Mhm.
And another thing is a money market fund that looks at that has a higher rate than the inflation rate,
Mhm.
because you wouldn't want to put your money somewhere that it is not growing, it is actually depreciating in the long run. So I think let's check the customer service, the inflation rate, and the interest that you are gaining,
Mhm.
and also the management costs. I
Yeah.
think those are my major things that I have looked at as I have moved into this
Into
other
this
new
other one.
one. Yeah.
Okay, I think for me now it's a little bit different because I just started it out like this year, and I would say what I was looking for, like while searching for a fund manager. First of all, I was looking for, let's say, a trusted company or a company that has been in existence for a while. So as I was looking at searching for the company, these fund managers, I kept checking companies that have actually been there for a while,
Mm.
not just a company that maybe started a year ago or 5 years ago, or it's a little bit shaky because if you're putting your investments in a place, and you just need to be assured of the security of it. So I did my due diligence and I settled with a company that has been there for a long while.
Yeah.
Yeah, so that was the first thing. Another thing, I was also looking at a company with good interest rates, but I had not checked in comparison with other companies, because you would find there's some fund managers were giving an interest of even 15, I don't know, 17%. And
What?
yes,
17%?
yeah, there's a time in January, someone like really just gave he had a breakdown of all the fund, like most of the money market fund managers in Kenya, and it was a whole lot of Excel sheets. And I was seeing like the company I settled for was somewhere, I don't know. But come to think of it, I was like, most of those companies that were giving these extremely high interests, honestly, I've not seen them in the market for a long while. Like you would find that just companies that just started up, and I'm I'm very much a calculated risk person. So I would look at it and I was just like, I can't just completely go in with this new, as much as the interest rate is really high, it's very attractive, but I just don't want to be attracted to the money, and then later on you're not sure of the security, probably. Yeah, so that's another thing I also looked. I just looked at something that's going to give me a higher interest, as you said, above the inflation at least, and something that is very stable. And another thing I also looked at was the customer service, because for me, I also have a problem with emailing you or reaching out to you and then you don't respond and I've given you my money. It doesn't sit well with, and especially in this current economy or current world, where sometimes you find that people who can also just, especially in the online world, people can, how can I say it? People can scam you. Actually, you can get, there are so many scammers acting to be pretending to act on behalf of these companies, while in real sense they're not. So that's another thing, like prompt customer service or prompt response when I contact the fund manager is also something to look out for. Another thing I also looked out for was the minimum deposit of these fund managers, because I also don't want to be in a position where I'm in a fund. I'm in a money market fund where I have to really stretch to meet the minimum deposit because I really want it to come from a place of I'm trying to really save. Yes, saving with a goal, but I want to be consistent. And if it's going to be an amount that I cannot deposit below a certain amount, it's going to limit my consistency.
Yes.
Because you can imagine if someone wants you to deposit, let's say, just an example, let's say 10,000 shillings, that should be the minimum deposit. And probably at that moment, you're actually earning that 10,000,
What are you doing there?
So it's not going to be feasible getting into this section or this type of company where it's going to limit you on your consistency, and in the long run you want to grow. So those are some of the things that I actually looked while investing in now my current fund manager.
That is interesting to know. I think also myself, the reason actually why I left the other one, that is something that you have just mentioned that I remembered, is also the aspect of the company being in the market for so long. Because you see that when it gives you some comfort and you feel secure that, and I think these companies that have been in the market for so long are the ones maybe who are giving good customer care.
Yes.
Because like they have known their clients over time. They know how to deal with clients. Not saying that these small companies don't have good customer care, but like these major companies, they give you so much more. And even when you are dealing with them on a daily basis, you can actually get to ask them what other investment options do you have, and they still refer you to other different investment options.
Yeah, and I think that's I think would probably be as a result of having systems in place, systems that are actually running and working, as compared to maybe a company that is starting out, trying to create those systems, trying to understand their customers, like they already have so much on their plate that sometimes they might get these hitches.
Yeah. Security and consistency as well.
Yes.
Yeah.
So on to our next one, it's REITs. REITs. Some people call it REITs. We call it REITs. REITs. What do you call it?
REITs.
Yeah. So I don't know. You can just give us maybe your overview of what REITs are, and if you've tried them.
So REITs is real estate investment trust.
Yeah.
It's the same thing as money market fund, but this can be a long term. It can be we can say it is a long term investment. And the major, what happens in real estate investment trust is that you give your money to a fund manager as well. And then that fund manager pulls funds from different kind of investors. And then now for real estate investment trust, just from the name, they invest majorly in real estates. Not really majorly, but they invest in real estates. They invest in real estates. So that is now different with money market fund, where money market fund they invest in short-term kind of investments. But now here in real estate investment trust, they invest in real estates. And as we know, real estates are not something that you just put your money into there and you get the returns immediately today. So it brings us to the different types of real estate investment trust. We have income in real estate, income rates and development rates. So they call them I rates and D rates. So in I rates is where you give your money to an investment to an investor. Now the investor that we call a fund manager, you give the money to an investor in who already has real estates already in the ground. So it means that you'll be earning your money immediately, but after some period of time, you'll be able to start earning interest. It is different with a development trust where development rates, where in development, just from the name development, this person has not developed the property. So you're giving this person the money to go and develop the properties. So once they have developed the properties, that is when now you can start seeing in the income coming in. So that is the main difference. So by the time you are going to invest in rates, you need to know which is the kind of rates that I want to invest in. When it comes to income rates, it means that the fact that the property is already there, it means that you're getting into a pool where you are going to accept what is already there. But in development rates, it means because these properties are being developed as you are, like you are said, putting your money actually to develop this kind of in real estate. It means that you will specify which kind of development rate that you want to get in. So if it is maybe commercial or maybe for residential, so you will get to understand which exactly. Those are the two main differences between the development rates and the other I rates.
Yeah, and I think that's very true. Just to add on maybe what you said, in both cases at least, like in both cases, these real estate properties, like these properties or these real estate investments are all income generating. It's just the difference is just that the other ones are already in existence.
Yes.
So you'll find that in both cases they are income generating, maybe in malls, even if you are choosing the development rates, maybe it's a mall that's now going to be built,
Yes.
But at the end of it all, it's going to generate income, maybe in terms of rents, when you let the office spaces or the stalls, maybe hotels, you find the hotel rates and the likes. And then another thing to add on it is now is when you compare it to now money market funds, in rates, an individual or you as an investor with your 2,000 shillings, you actually own a part of the property because it's like you're buying a share of the property. And another thing I realized I noticed is for rates, they're actually traded in the like these companies themselves have their shares traded in the market. So when you're buying that share, let's say there's REITs and you've been listed,
Yes.
and you've been listed as a company, it should be the stocks market, right? And then me, as an investor, I go and buy those shares. I'm buying those shares and I'm becoming an investor to your property, but I'm gaining. It's like I'm a shareholder of that company, and so when I'm getting paid, I'll be paid in terms of dividends, and as compared to money market funds where now you earn interest.
Yeah, and also as well, if it is shares, then you bring in the other aspect of capital gain.
Yeah,
Because today the share, maybe you might have bought the share at maybe 20 shillings.
yes,
And then after some time it goes to 27 shillings.
Yes.
So you get to gain. So you can actually gain from dividends or now the capital gains.
Yeah, that's very very brilliant.
And sorry.
Yeah, it's okay. And then just another thing to add on it is that just as you said, like they take a while to like it's a long term investment because it's not a one big thing or a short term investment as the money market funds. Yeah.
So I think it's important to know that and know that and decide which kind of investment that you want to get in.
Yes.
If it is the I rates or the D rates, because the I rates you might start seeing your money coming in a little bit faster compared to the D rates.
Yeah, true.
And now it brings up your goal, like why are you actually investing in these specific rates?
Maybe because you don't have 50 million to get your property.
But for how long? For how long are you willing to invest in that specific rate again? Yeah, so I think it's a major thing that we need to look out for.
Yeah, that's really nice. And I think to add on it gives you the opportunity, just from the statement I've said before, it gives you the opportunity to earn, to actually invest in property without having the lump sum that you can put as maybe a property deposit, your first deposit on a property. So it gives you, at least even with your 2,000 shillings, you would have a share in a particular property, maybe in a company that is dealing with so many hotels that are bringing back income, or so many commercial spaces that are bringing them income. So it gives you that opportunity to be a real estate investor in your small way.
Yeah, and you can, and I think that is where it all begins.
Mhm.
It's like in the small steps.
Yes.
Because now you will get to a point where you are able to own that major corporation, and you already know how this small corporation works. So I
Yeah,
think
very true.
by just being a part of
It.
yeah. And I think we need to be cognizant of the fact that there are so many people offering these opportunities.
Yes.
And we need to know who are the scammers and who are the legit people
Yes.
that we can invest in. So I think in all this, in money markets, in rates, in everything else that we are going to talk about, it's important that we actually get to do our due diligence.
Yes.
Because there are so many. And right now, I think everyone is focused on investments and this conversation
passive
about
income.
Yeah, passive income majorly.
Yes.
And this conversation is becoming so like a trend, and most people are hopping onto it.
Yes.
And there are definitely people who want to just gain from it
Yeah.
and take advantage of you who is not willing to do the due diligence.
Yes. So make sure you do the groundwork.
Yeah, yes,
So-
definitely.
So on to our next is pensions. Yeah.
Mm.
What can you say about pension?
Retire.
Because I know for you, me, I wouldn't lie. I've not started putting aside my pension fund, because I had begun it, and I know I need to start as soon as possible. I had started it, but I was just in the emotion state, doing so much planning, research, but I didn't get to actually start putting in the money. But it's something that I plan to do. So yeah.
Pension. You are 20 years old, you think that you don't need pension. You need that pension.
You need
20 years will be 10, after 10 years you'll be 30, after 10 years you'll be 40, after 10
Yeah,
years
sure.
you need to retire, or even you need to retire early. So when we talk about pension, I just think about retirement. And this is where you are saving for your future self. Actually, I was just thinking the other day, when we are working out, it is actually pension for our bodies. Exactly. So the same way we are saving for our bodies in our later years will thank us for saving our bodies at an early age. It is the same thing that is happening with pension. So you need to start having like a pension fund. And now if you have started with money market, when you talk to maybe the customer care person, they will definitely tell you they have pension.
Actually, let me tell you what happened. The day I was doing my research, I had actually gone to inquire about pension. And I think we had had that conversation before. So I had gone to inquire about the pension. And so before inquiring, I just went to the website, like searching for all these things. And then the investments, I saw, yes, there's pension, but there's money market fund. And then there was so many investment options. And I was like, I have always wanted to invest in money market funds, And I was like, right now, probably this is the most urgent, and I just switched at the moment and say, let me inquire about now this instead of the pension. Yeah, but it's still a plan that is within my line.
Yes.
Yeah, that I'll work on it.
And also the fact that it has come to your attention,
Yes.
then definitely it will never leave your mind.
Yeah, sure.
At some point, and also at some point you'll be like, I thought about pension. Like right now it might not be at the forefront because your goal, that is not your goal right now. Your goal is maybe the money market fund. And I think that is why it is important to know our goals before we actually begin all these conversations about investment. So for pension, basically it's where it's a saving platform, but at the end goal you will definitely get interest for saving in there.
Yeah.
in their platform. And despite the saving being a small amount, it's a place where you just put your money for your future self. And you see, this is not money that you're going to touch. You can be able to withdraw, but there are some like the where I have put my money. I say that I don't want to touch it for the next 20 years. So I know that for the next 20 years I'll just be throwing money somewhere. Maybe money that I know I need it, but I'm just trying to fix my mindset not to touch it. And they are also helping me not to touch it. But I know at the end of the day, it will be helping me. Maybe maybe I want to retire early. I will not be able to get it at that time.
That's saying
But at some point later on, I will be able to get it. But now, God forbid that maybe you pass on before you get to retire. They have a next of kin. So you need to get to also to look for a person who you are comfortable sharing with that information. So such that they can be able to be your next of kin, such that you don't have to worry about what if I pass and I don't use this money and it's just stuck somewhere. So I think there is a next of kin. But what I want to say is that we need to start planning for our retirement at this early age, because right now we have the energy and we can, as we continue growing, we continue earning more money.
Yes.
God's grace. We continue meeting different people who change our mindsets. But if you know that for sure you want maybe to retire early, or you want to just have a good life in future, like after and maintain the same kind of lifestyle that you've been living initially, then I think retirement is a good option. Because for now, like the pension manager that I'm working with, after once you have retired, they will be given like a lump sum amount at the beginning, and then after that you'll be given in installments. So per month you'll be sent a specific amount of money.
But my question comes in. You know, there's this concept of the time value of money. The money you're saving right now in 20 years will be way less of its value right now because of that time value of money. Won't you think it would be, let's say, advisable to put into something that's actually generating or income or appreciating continuously? Let's say, I know for some people, you would ask them your saving plan, and they're like, I'm saving through maybe real estate. Maybe I've developed these plots with maybe residential buildings that keep on generating income, or I'm saving through this other investment. You know, don't you feel like probably in 20 years, even if you're saving right now 10 million in 20 years won't be of the same value right now. Actually, it would be way much less than that. What would you probably be your opinion on someone who is in this state? Because you're like, 1,000 bob even 5 years ago would get you so much, but right now you would go to the supermarket and get one thing, and that's over. You know, what would be your opinion?
You also, when you invest in pension, not like you will just receive the principal amount. There is also the interest aspect of it. So the pension manager that you are going to approach, then they definitely should have a good rate that you are looking for, so that it caters. And most companies, they provide a rate that is slightly higher than the inflation rate.
And do they get like rechecked, or rather
reevaluated?
Yeah, reevaluated after a certain period.
I think they do, because last year I was just told I was given a specific rate for my platform, because they normally send like monthly statements, and there is an online platform where you can see. So like last year it was some amount, but I'm not sure. Maybe I can confirm this year, and then maybe we can get back. But definitely there is an interest rate that is attached to your principal amount. And also the fact that you know that this money is specifically somewhere,
Yeah.
and I'm just putting money in there, and nobody is going to touch it. Yes, it is earning interest, and even if it is little, but I am secured. Like my future is secured. Because my point is, if I put my money in real estate somewhere, I would want to touch that money for something else. And then now, there is that continuous flow of my money everywhere, I am not sure about when I get to a point where I am not able to continue funding that specific account. But now in pension, if I know I am right now I am putting in that money and it's just stuck somewhere, I feel like it gives me some security for my future. Yeah. And I think that is what me I am looking at. And I think it's important for us to check our goals. Yeah. And the reason why we are investing into whatever. And something else that I wanted to say, there is something called a retirement number. If you want to start investing in pension, you need to get to know what your retirement number is as you are beginning that journey of retirement, of your slow retirement. So you need to get a retirement number. So if you know, if maybe you anticipate that, let me say, your monthly expenses once you retire will be, let me say, 100,000. Take that 100,000, which is your monthly expenses, and multiply it by 12. You will get your retirement number for 1 year. So that is 1.2 million. 1.2 million. In finance, we use like a multiplier of 25, assuming that maybe you will stay for 25 years after your retirement, or like just taking in account things like now inflation, your different lifestyle. Multiply that 25 times the 1.2 million, it will give you a specific number. That number that will be given, that should be your retirement number. And that retirement number should be your goal. So when you begin, if you want to begin trying to save for your retirement, it's important to get to know this retirement number, because if my goal is security, then I want to be secured. I don't want to be secured but not really secured, So that is why we use this 25 as a multiplier effect, just assuming that there are a lot of things that will happen in between there. Yeah, so I think get to know your retirement number if retirement early is your option.
Okay. So on to our next. So just to say, those are the three major passive income options that we're going to discuss today. And so we're going to go to the next section where we're going to have like three others, but for active, right?
Active.
Yeah. So we're going to start with real estate.